Hey there traders, it's after close of market on Tuesday, September 2nd, and the first trading day after Labor Day came in hot. We had yields climbing, gold smashing records, stocks pulling back, and volatility stirring under the surface. Tech also took the biggest hit, and defensives have found some love. And global headlines kept traders on their toes. So tonight we're going to break it all down. The market's closed, the bond and gold story, what's happening in tech and AI, and 2 actionable trade setups for tomorrow's open. This is the kind of tape that we thrive in, traders, so let's get fired up. Alright, let's have a little look at the market recap after the close on Tuesday. Let's start with the numbers at the bell. S&P 500 fell 0.7% to $6,415.54. The Dow slipped 0.6% to $45,295.81. Nasdaq also dropped 0.8% to $21,279.63. And the Russell 2000 lost 0.6%, closing around $2,352.34. So, as you can see, all 4 major indices finished in the red, with tech leading the way down. Now traders, let's remember, we just ended August on an incredible run of new highs. What we're seeing today is healthy digestion, not collapse. So the bulls are still very much in the driver's seat, but the market is recalibrating as September begins. And we're going to jump on this a bit later, which we call the September effect. So as for now, let's take a little look at the news and the market in general. The real driver today wasn't equities, it was the bond market. Long-dated treasury yields climbed again, and that pressure hit growth and tech valuations straight away. In a nutshell, high multiples don't like higher yields, so the Nasdaq took the brunt of it, traders. Now let's take a look on the flip side. Gold exploded to fresh all-time highs, crossing 3,500 USD per ounce. That's massive, guys. It tells us investors aren't panicking out of equities, but they are hedging risk aggressively. When gold, bonds, and the dollar start moving like this, it's a big tell that traders are bracing for volatility ahead. The takeaway: this is a market shifting gears, rotating, hedging, and repositioning, not running scared. So here we go. They're saying gold over here trading around 3.6 an ounce. Yeah, this is crazy times. I'm not sure how many people would have predicted that gold would be sitting at this type of price, but yeah, we trade the market, and that's super interesting. Now let's talk a little bit about tech and AI downdraft. So tech led the slide, and yes, that includes AI darlings. Nvidia slipped further, AMD sold off, and even cloud names like Microsoft and Amazon cooled. But this is important, and I'll tell you why. When Nvidia and AI linked names pause after monster earnings and multi-month rallies, that's not bearish, it's profit taking. So think of it as oxygen for the rally. Without pullbacks, leaders burn out. So the one interesting pocket in all of this, well, Palantir actually bucked the trend and pushed higher. Proof that in a rotational market, money doesn't leave in tech entirely, it gets choosier. So the Nasdaq was red today in a big way, but it was red with purpose. Rotation and digestion, not destruction. It's a very interesting week, and as always, a good time to be a trader, everyone. So our first hot stock for today is Alamos Gold, ticker symbol AGI. Here we go. Listed on the New York Stock Exchange. Let's pull it up. So why it's hot? Well, gold just hit record highs, and AGI is a clean leveraged way to play the trend, traders. Alright, our buy signal, what are we looking for? Well, we want to break to new highs on expanding volume. This will be our momentum entry. And as a sell or fade signal, if AGI gaps up hard tomorrow but fails to hold VWAP in the first 15 minutes, that's your fade setup. So we've got to be attentive at the open of market as always, but this is looking very interesting. Okay, taking a look at our second one for today is Microsoft, ticker symbol MSFT. So while we're taking a look at Microsoft, while the AI hype names wobble, Microsoft is the steady mega cap with consistent earnings growth and a fortress balance sheet, traders. In volatile markets, it often becomes the safe harbor of tech. Alright, so as a buy signal, we're looking to hold today's low, reclaim VWAP with steady intraday strength. This will be a continuation setup. And looking for a sell or fade signal, slide back below VWAP with heavy selling. This will be a tactical short opportunity. So these setups give you both sides of the tape, a momentum breakout in gold and a defensive tech anchor that can either lead or break down with the market. So while keeping an eye on our indices and our big cap stocks, we're going to keep a close look at those two going into the open tomorrow on Wednesday, everyone. So I jumped into this article a little bit earlier in the video, but we didn't talk about it. Let's talk about it a little bit now. So essentially this is about September seasonality and the rotation radar. So some of you might have seen this article drop on Reuters. Just a quick reminder for traders in general. Historically, September is the weakest month for equities. That doesn't mean disaster, but it does mean we should expect choppier sessions, more headlines driving intraday moves, and faster rotations across sectors. So, just taking a look at this, super interesting. The signs are already here. Tech is pulling back. Defensives like healthcare and staples are catching bids. Gold and safe havens are breaking out. And this is the market telling us stay tactical, expect volatility, and trade smart. So we can see red all over the place here, and these articles alluding to what we're talking about. But essentially, in September especially, we've come to expect challenging times. But if we know how to manage our risk and how to be patient, it's going to pay off. It's going to pay off for sure. So we've got to stay tactical. All right, traders. Key takeaways from Tuesday's session will be: 1. All major indices closed red, led by tech. 2. Bond yields surged. Gold ripped to all-time high. Hedging is on in a big way. Thirdly, tech cooled. AI leaders digested. This is healthy, not bearish. And fourth, lastly today, 2 setups for tomorrow. AGI riding gold's momentum and Microsoft as the defensive mega cap play. So, for our trading mindset today, this is where money is made, not in chasing green days, but in trading the setups that pullbacks create. Stay sharp, everybody. Stay patient and let the signals lead. So, as I'll sign off for today, traders, Tuesday kicked off September with volatility and opportunity. Wednesday is all about execution. So, let's trade the moves, not the mood, and I'll see you at the market open. Thank you for joining our video again today. Happy trading. I'll see you after the open of market tomorrow. All the best. Take care.